This is the miracle of EMA settings. You're gonna learn the most accurate trading strategy ever. Just make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, we need to add 5 exponential moving averages to our chart. And even if you're on the free version of TradingView, you can have 5 EMAs on your chart. You just need to follow my instructions. Here we click on indicators and we search ribbon. This one, moving average ribbon. With this indicator, we can have 4 moving averages on our chart, but we need to change their settings. So here we go to the settings of the indicator and we try to give them some special settings and combination that we need in our trading strategy. So here in the inputs tab, you can see that here we have 4 moving averages, and for them we set the type of moving average on EMA. And then here for the first EMA, we set the length of the EMA at 3. And for the second EMA, we also set the length at 3. For the first EMA here, for the source of calculation, we set it at high. And for the second one, we set it at low. Then here for the third EMA, we set the length at 8. And for this EMA, we also set the length at 8. And for the third EMA, for the source of calculation, we set it at high. And here for this one, we set it at low. Now we need to change their colors. Here for the first EMA, we set the color to orange. For the second one, also we set the color to orange. For the third EMA, we set the color to white. And for this one, we also set the color to white. And finally, we go to the style tab and we increase the thickness of the moving average lines so they will be better visible on our price chart. Alright, we're done with the settings of these 4 exponential moving averages, and we need to add another exponential moving average to our chart. So here again, we click on indicators and we search EMA. This one, moving average exponential. And now we need to change its settings. So here we go to the settings of this EMA, and here in the inputs tab, here for the length, we set it at 89. And then here in the style tab, we change the color to green. And we also increase the thickness of the line so it will be better visible on our price chart. Alright, we're done with the settings of the moving averages, and now let me teach you how you can find accurate buy-sell signals by the help of these 5 exponential moving averages. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our trading strategy, this green line here, which is an EMA with length of 89, will help us with trend identification, midterm trend identification. When the price is below the green line, the market is trending down, and when the price is above the green line, the market is advancing in an uptrend. First, I explain long position setup, and then I will teach you short position setup. When the price crosses above the green line and goes above that, like what happened here, we say that probably the market is turning to an uptrend, and now we want to find a low risk trading opportunity to enter a trade. The best entry point would be in the pullbacks, and these orange and white EMAs will help us to identify pullbacks and end of the pullbacks. Here these 2 orange lines are EMA with length of 3 but different source of calculations, and you can see that they have created a channel around the price. From now, we call this orange channel, the channel between the 2 orange lines. And then we have these 2 white lines, which are EMA with length of 8 with different source of calculations. And you can see that the 2 white lines have also created a channel, but it is moving farther away from the price action. From now, we call this white channel, the channel between the 2 white lines. The orange channel is very close to the price action, approximately engulfing the candles, but the white channel is moving a little farther from the price action. Alright, now let me teach you how we use these white and orange channels to find pullbacks and end of the pullbacks. As I said, here the price is crossed above the green line and is moving above the green line, which tells us that probably the market is advancing in an uptrend, and now we want to find a perfect opportunity to enter a trade. When the price is advancing in an uptrend, we have the orange channel inside the white channel or above that. We wait for the times that the orange channel partially goes below the white channel. This is what we want. Here, the bottom line of the orange channel should go below the bottom line of the white channel. And here, in the ideal situation, we want the upper line of the orange channel also go below the upper line of the white channel. So in simple words, here we want the orange line to go below the white line, and here also we want the orange line to go below the white line. But here for the upper part of the channel, in case if the orange line is very close or in touch with the white line, it is still accepted. So we don't want necessarily the orange line to go below the white line here in the upper part of the channel. But for the lower part of the channel, we want the orange line to be below the white line. Here in this case, we have an ideal situation. This is a perfect setup for us because here in the lower part of the channel, the orange line went below the white line, and here in the upper part of the channel also we have the orange line below the white line. So when we have a situation like this, while the price still above the green line, this tells us that probably a pullback is forming on the chart. Now in the next step, we want a signal that shows the pullback probably ended, and again we use the orange channel and white channel to identify end of the pullback. For the upper part of the channels, we want the orange line to be closed above the white line, like what happened here. And in the lower part of the two channels, we want also the orange line to be closed above the white line. We want them at the same time. Here, when this candle is closed, you can see that here the orange line is above the white line, and here also the orange line is above the white line. This is a signal that probably the pullback ended and the price is gonna advance more. So here the buy signal is confirmed, and in practice we could enter a long position at this point when this new candle was opened. The stop loss for this trade is placed below the white channel and profit target at risk to reward ratio of 2. I recommend when the price goes above the green line, you only take the signal on the first pullback, because here we are dealing with midterm trends. And if you enter in the next pullbacks, it is probable to be in the last movement of the price and end up in loss. So if you want to take also the next pullbacks, the risk is higher, and if you want to enter, better to take your profit earlier. For example, setting your profit target at 1.5 risk to reward ratio, or just close your position when you have signs that the price is turning down with high pressure. For example, here we have also our long position setup. So in practice, we could enter a long position here at this point with the stop loss below the white line, and for example, taking our profit here. But as I said, here in this setup, we have more risk, and you can see that it was actually the last advancing of the price, and then after that, the price turned to a downtrend. So when the price crosses and goes above the green line, it's better to focus only on the first pullback, which offers you lower amount of risk. All right, now let me show a short position setup. When the price crosses and goes below the green line, this tells us that probably the market is declining in a downtrend, and we want to find a low risk trading opportunity to enter a short position, and this is when we have a pullback. Similarly, the orange channel and white channel will help us to identify pullbacks and end of the pullbacks. When the price is declining in a downtrend, we have the orange channel inside the white channel or below that. But when a pullback is forming, this can change, and we can have the orange channel going above the white channel while the price is below the green line. Here we want the upper line of the orange channel to go above the upper line of the white channel. So here in the upper part of the two channels, we want the orange line to go above the white line. And here in the lower part of the two channels, we want the orange line very close or in touch with white line, like this case here, or ideally in the perfect situation going above the white line, just like our previous example. So if we have the orange line here above the white line, it is a better setup, but a situation like this is also okay since it still shows a shift to upside pressure and giving us the probability of a pullback. In the next step, here in the upper part of the two channels, we want the orange line to be closed below the white line, and at the same time, here in the lower part of the two channels, the orange line should be closed below the white line. So when at the same time here we have the orange line closed below the white line and here also the orange line closed below the white line, it tells us that the pullback probably ended and the price is probably going to decline more. So here the sell signal is confirmed, and in practice we could enter a short position at this point when this new candle was opened. The stop loss above the white channel and profit target at risk to reward ratio of 2. As I mentioned in the previous example, I recommend only taking the first pullback after the price went below the green line, because taking the next pullbacks can put you in the risk of being in the last decline of the price and ending up with loss. Please pay attention that although this trading strategy is very accurate, but it doesn't mean you will not encounter false signals. No, this is not possible in reality, and there is no trading strategy with guaranteed signals. Losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it is recommended by professional traders. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.